I have to pay attention to the implications of the great disruptions that are going to take place. Because the world will be radically different in 5 years. And it's going to go year by year, become radically different.
The billionaire investor Ray Dalio is warning about some serious troubles that the world might be seeing in the near future. He has recently been talking about the rivalry between the US and China when it comes to several matters, including trade and technology wars, which eventually could lead to a potential military war. But now, Ray Dalio sees that the ongoing conflicts in Ukraine and also in the Middle East could spread out and become an international war instead. According to him, there's now a 50% chance of a world war where more countries could get involved. These conflicts are happening now at a time when the global economy is still recovering from what happened in 2020 when large parts of the economy were shut down and trillions of dollars were created. The effects of that are now being manifested in the economy where many people are barely keeping up with inflation and the rising cost of living. Besides the fact that we are at the final stages of a long-term debt cycle that happens once every 75 to 100 years. But the main question is, how long can the US economy sustain further spending on funding countries that are involved in conflicts abroad? And what about inflation in the average household, and how are they keeping up with the increasing cost of living? But before we continue answering these questions, make sure to subscribe to the channel and leave a thumbs up if you haven't already. Now, it is estimated that the US has spent over $100 billion in foreign aid ever since the war in Ukraine started in 2022, with more money that is likely to be spent. This is happening at a time when the effects of inflation and the increasing cost of living on US households are still very evident, and it's putting significant pressure on their budgets. This is in addition to a current growing government deficit that is around $1.7 trillion, which increased by 23% since last fiscal year. This government deficit consists of $4.44 trillion in government revenue and $6.13 trillion in government spending in 2023, which makes the deficit of $1.7 trillion. The accumulated value of these deficits throughout the previous years is now at $33.7 trillion, which constitutes what we know as the national debt. And as most experts agree, such huge deficits and a growing debt cannot continue forever without causing some serious troubles down the road. And that's what Ray Dalio has been warning about. According to him, there's also a bigger problem when it comes to the demand for government bonds and whether or not there are enough buyers willing to buy this debt. Here's what he said.
When it happens that people don't want to buy enough debt that needs to be sold, you have the bigger crisis, a debt rollover question. And so let's say, as we're now going to issue another huge amount of debt, and the owners of that debt, there's a lot of owners of that debt who own too much of it. In fact, the main problem that's existing today, that is with banks and with other governments and others, is they own too many treasuries that are losing money. Okay, so the Silicon Valley Bank losses and so on, and the banking system's losses are largely due, including the central bank's losses, the Federal Reserve's losses, are largely due to holding bonds that are gone down in value, therefore lost money, and funding it with an interest rate that's too high. Other countries, too, are increasingly feeling worried about sanctions. In other words, could they be sanctioned? These types of things can affect the demand for the bonds. If you get them to sell the bonds, then it's a real problem. So, because that means either interest rates go up a lot or central banks have to come in and print a lot. And that's the thing that we have to be wary of. So in either case, we're going to have a debt problem. And the question is, how quickly and does it evolve in the way that I described, debt service payments or rollovers?
So as more and more investors and even countries choose to avoid buying US bonds due to fear of sanctions or any other reason, this could potentially lead to even further implications on the US economy and the ability to spend more money on internal and external obligations. On the other hand, if we take a look at the average consumer finances at the current time, we can see some alarming signs. The credit card debt is now at an all-time high level of more than $1 trillion, which is a level that has never been reached before. This comes down to an average of more than $5.7 thousand of debt per consumer as of the first quarter of 2023, which means that this number must have increased since then. We can see the direct results of this as car payment defaults are on the rise, together with a decrease in the personal saving rate, which spiked enormously a couple of years ago when the stimulus checks were paid out. So all of these factors indicate that many consumers today are at a critical stage due to the increasing cost of living and rising interest rates. And more government borrowing and spending is only going to exacerbate the problem for the economy in general and the average consumer specifically. Now, when it comes to the investment aspect and how to go about it, Ray Dalio says that cash is now king, which opposes his recent stance on this in the last few years, where he used to say that cash is trash. This is mainly because of the increase in interest rates that are now at 5.5%, which made holding cash somewhat attractive compared to what it used to be before.
First, I want to be in the right places, you know.
Geographies, you mean?
Right.
Yeah, okay.
Right. Okay. I want to be where the action is, where there's the civility and all of that kind of thing. I'd like to have diversification, because what I don't know is going to be much more important than what I do know. Diversification can reduce your risk without reducing your return, if you know how to do it well. I have to pay attention to the implications of the great disruptions that are going to take place, because the world will be radically different in 5 years, and it's going to go year by year, become radically different. Next elections, the debt situation, all of these things are going to change. And then with the new technologies, we're going to go, it's like going through a time warp. We're going to be in a different world, okay? And the disruptors will be disrupted. So I want to know, like, I don't need to pick those who are creating the new technologies. I need to really pick those who are using the new technologies in the best possible way. They're not less part of the bubble, and I don't want debt. I don't want to own debt, you know, bonds and those kinds of things. Temporarily, right now, cash I think is a good
because
investment.
Rates are where they are. Yeah.
Because and it has its the interest rates are fine. I don't think it'll be sustained that way because of the issues that we're talking about. So those would be my themes.
So overall, the current economic and geopolitical situation in the world right now is very delicate, and there's a relatively high chance that these conflicts could spread out where other countries might get involved, as Ray Dalio is predicting. All while the average person is indirectly paying the price for what's going on due to losing their purchasing power because of inflation and the unprecedented printing of money which happened in recent years, which also is expected to happen again if an international conflict breaks out where more and more money must be created to finance the cost of such an event. So that was it for this video. If you found this helpful, you can click here to watch this one. Other than that, make sure to leave a thumbs up and to subscribe to the channel. And with that being said, see you in the next one.